Hi everybody, this is Angel with Succeed in Finance. Welcome back to our channel. Today we are going to take a look at the stock market, how the things are going. Over the last couple of weeks, the market was a bit boring, but it may seem so. But actually the situation it may getting pretty interesting. So let's take a look what may happen over the next couple of weeks or months. So you may have watched my previous video about the V-shape bottom or W bottom, but I'm going to start from the registered bottom on the 23rd of March. What happened since then? We see here one really well expressed impulsive five-wave movement, upward movement, and after that, after the registered temporary top on the 30th of April, the market started to go sideways. Over this period, actually what happened? This is one very interesting situation. We've got here ABC correction. This is a typical, very typical flat correction with a little bit extended C wave. This is a pretty typical scenario when the market is pretty strong. What do I mean? Actually, this correction didn't succeed to reach any deeper than this level. If we put here Fibonacci retracement levels, it barely approached less than 23% retracement. It didn't reach 38.2% retracement. Which is an indicator for a strong market. In other words, the bulls prevail and the sellers, the potential sellers, are not so strong. And one thing that it bothers a little bit, if this is the scenario, is the timing. What do I mean? Actually, this correction, it took only about 2 weeks and a half, or in other words, it was a pretty short period of time. If we compare the entire first wave, because we consider this as a first wave from a long-term upward movement, if this is the first wave, to consider this as a second wave, it's a pretty short as a period of time. If we take a look, it took about this second wave is, in other words, 2.5 times shorter than the first wave. This is not pretty typical, but it's also acceptable on the other hand. So if this is the scenario, if we've got here first wave and if this is the second wave, then here is the interesting point. That would mean that actually from here, from this bottom that was registered in the middle of May, it may have started a new impulsive wave. In this case, it should be the third wave. And as we know from the Elliott wave counting, in most of the cases, actually the biggest portion of the impulse should be expressed during this third wave. In other words, we may expect a huge movement from here. It may take a long time, but also we may expect a huge movement from here. So that is why this scenario is pretty interesting. We cannot be sure that this is actually what is going to happen, because as I said, one of the things that bothers me is the timing. It was a pretty short period of time to consider this as the end of the second wave. But one other scenario could be that this is just a short X wave, and after that this correction to continue, so to expect a deeper correction. As you may have watched my video about V-shape bottom or W bottom, then we expected that this correction starting from here could reach much lower levels at about 21,000 in Dow Jones Industrial Average, but we see that this didn't happen. And it's pretty normal. If we take a look at the fundamentals, what happened over the last month. First of all, we've watched this the announcement from the Federal Reserve. They briefly what they say, they gonna do everything, all the necessary that just to push the stock market to rise. In other words, and you've seen, we see also this negative interest rates policy. You may so it is pretty normal that these measures to bring us to bring the market to this kind of results. Imagine yourself as a money manager. Imagine yourself that you are running about $100 million. What you are going to do if we have negative interest rates? In other words, you are not incentivized at all to put this money and to keep them in the bank or just to some short-term bonds. You have to put this money somewhere, and the most obvious way where you can invest it, where you can invest this money, is on the stock market. So all of this is resulted in this situation, in such a not deeper correction, and some of the traders that have expected much deeper correction in order to buy stocks on a much lower levels, somewhere from here or from here on the 61.8 correction, something like this. This will most probably not occur. This will not happen. So as of now, over the last couple of weeks, showed us that the market is actually not inclined to more sales, and which means that actually this scenario, as I said, that if this is the end of the correction, or even if this correction continue, that we can expect starting the new rise of the stock market. In other words, the stock prices to start rising from these levels. So it is, in other words, what would that mean? It will mean if we are at about to buy stocks, now is a good time to consider this. So if we take a look, this was the Dow Jones, but actually the situation in S&P 500 is pretty similar. There are some slight differences actually. Yeah, this is 1, 2, 3, 4, 5 wave, and here we've got A, B, C correction. Actually, the S&P 500 is doing even better than the Dow Jones, because as we said, here Dow Jones didn't succeed to reach this 61.8 Fibonacci retracement, but here on S&P he actually exceeded this level. sorry about that. So from here it would be pretty normal if we start looking at new impulsive upward movement. So guys, for those of you who are, as I said, who are about to start buying for a long-term period to buy stocks, this is a pretty good time, I think. If you expect this market to, if you expect to buy the stocks on much better prices, on a much cheaper prices, you might be you may not succeed to do so. Please hit the like button. If you haven't subscribed to this channel, please do so, and see you in the next video. Take care.